Hello, Wolfpack. Sorry for the lack of altcoin videos recently. I simply just don't see it necessary to make too many altcoin videos because I'm pretty sure, from given my view on the market currently, making videos on altcoins right now is pretty irrelevant. Because I don't think they're going to do too well, right? Well, obviously, when there's a trading signal and there's a trading opportunity, that I feel necessary, I'm going to post it to Twitter or possibly YouTube, so keep an eye out. But for the most part, our videos now, and until my opinion is either confirmed or invalidated, are going to be on Bitcoin and Ethereum. I have an Ethereum kit, or an Ethereum video in the works, so make sure to stay tuned for that. I know a few people have been requesting an Ethereum video. I haven't done an Ethereum video in about a week, so I'm going to be looking at Ethereum soon. Possibly today, if not tomorrow, so keep an eye out. But as for today, I want to keep a look at Bitcoin, keep looking at Bitcoin, because we have seen a little bit of bounce, right? And that's expected. And this bounce is actually so far what we expected previously, and we're going to remove some indicators here so we can get a pretty clear view on what's happening on Bitcoin here in this bounce. So, what we see on Bitcoin right now, and the reason why I'm going to be labeling this bounce a dead cat bounce rather than a recovery, is because this was obvious, okay? This is what we outlined in our bear market video, okay? We're going to see a bounce right now, right? That I've said that before, I've said it again, and we've entered a little bit of, a few positions here to try and take advantage of the bounce because it was pretty obvious it was going to come. I mean, we're so undervalued. It's very, very rare that on the daily chart we drop below the Bollinger Bands this far, and we did that, and hence we're due for a recovery, and we're seeing that right now with long downside wicks. If we zoom into a lower time frame, what we can actually see is that Bitcoin managed to break through its horizontal channel, which could also be perceived as a ascending triangle formation. We broke that to the upside, and we're currently flipping and getting back above the descending wedge formation, which, if we zoom out, we can show you that real quick here. The descending wedge formation has been forming on Bitcoin for a while, right? Ever since around the 2nd of November. So it's a long-term descending wedge formation. We dropped below it, had a little fake out below it, I guess you could say, and now we're getting back above it, which is good. It's good to see. We didn't manage to close above it, but we have succeeded in flipping it on lower time frames, as I just showed you on the hourly chart. Now, if we flip over to the 4-hourly chart and get a bit of a mixed view on Bitcoin here, we can see that the Bollinger Bands are compressing massively. This usually happens after a sharp move down or up, okay? And this means that a relief rally is imminent or happening, and it's happening right now. I've rallied from around 46,000 to around 50,000. The reason why I'm not even considering anything in this current state of the market is because, well, we haven't taken back any major resistance at all, right? But yeah, we've broken back into the descending channel formation. We haven't actually confirmed to have hold for support, especially on the 4-hourly chart. We need to close a candle there, and on the daily chart as well, we are yet to close a candle above that. But once we break into the descending wedge formation, we still need to be breaking this uptrending level of support that we lost in the drop down. Let's go to the daily chart quickly. We can see this long-term uptrending level of support that formed here in July and here in September. We actually didn't manage to hold during this drop down. We dropped straight below it, and now we're currently going to be retesting it to the upside. Now, what I would argue to the people who are bullish on the market currently is that this looks perfectly like, say, for example, this screen was flipped upside down. I know there is a way to do this in charting. People do it all the time, but I don't really know how to do it. But if you flip this upside down, what this looks like is actually, something like this, where we had a downwards trend. The price was trending above this downwards trend. We broke to the downside, and now we're coming back to test this resistance, and hence we're going to be rejecting, right? That's what we're expecting here. Same thing to the upside, right? You can see that there would be a scenario in which you are testing resistance to the upside, you finally break it, and now you're coming back to test it before continuing the trend. Now, the trend is downwards, and we're simply retesting resistance now. So the most likely scenario after a break to the downside is actually coming up to this line here, testing it for resistance, and then dropping back down. Now, I don't think this test is going to be very quick. I think it's going to take a long time, okay? And the reason why I don't think, in addition to what I just said, that it's going to result in a rally is because, well, this is a pretty clear head and shoulders pattern we have playing out on Bitcoin, right? We've bottomed out roughly at the same point. We have the neckline here, which has worked perfectly so far at 42,000 USD, and hence we're bouncing up, and we're going to be testing this line here, which is going to match up perfectly with what we did here in 53,000, right? 53,000 test there. So if we do reject from this line, you can be pretty damn sure, if you're not bearish already, that you should be bearish at that point, right? Because not only would that be a false breakout, a fault or a failed break to the upside above long-term major support, it would also be a head and shoulders pattern, and it would also confirm the theory that when we see a dead cat bounce, what usually happens is we drop below the red line, right? Or we test it for support first, and then we bounce above it. So let's get a bit of a more in-depth look at that, because that was pretty confusing what I just said there. What typically happens in a bull market, it happened in 2013 and 2017 and 2019, okay, is when we see a dead cat bounce, we have the peak on Bitcoin, we drop downwards below the bull market support band, we bounce off of this red line here, which is the 50-week SMA, right? We bounce above the bull market support band, and then we get rejected, and we slowly decline for about a year until we reach the bear market bottom, which is on the 200, okay? Same thing happened in 2018, okay? So what we saw in 2018 was a peak on Bitcoin. We slowly declined, dropped below the bull market support band. We bounced off of this red line, which is the 50-week SMA, and then we saw a slow deterioration until we bottomed out on the 200-week SMA, okay? What we are seeing now, in my personal opinion, is just that, right? We top out on Bitcoin. We have a slow deterioration down to below the bull market support band and down to the 50-week SMA. Some would argue that it has not been slow enough, right? It doesn't look identical to previous cycles. This has only been a 4-week downtrend. For us to get to the 50-week in previous cycles took, a matter of multiple months, and in 2013, the same thing. So it's happened quicker than usual, but this bull market hasn't been completely typical. Anyway, we're bouncing off of that right now, and if the past trend is going to play out in the future, we're going to get back above the bull market support band a little bit, right? And then we're going to slowly deteriorate until we reach the 200-week SMA, which is going to be probably somewhere around the mid 20k region, maybe 30k in the end of next year, about a year away, right? That's what I see is the most logical thing, according to the technical analysis, to happen right now. The fact of the matter is, this bounce is nothing but a dead cat bounce until it can kind of flip some resistance. Some would argue, right, and this is a valid argument to a certain extent, some would argue that, hey, we're just forming higher lows, right? We're just forming higher lows. I agree with you. But when we form higher lows, it is not ideal for us at all to be losing fundamental dynamic support zones, which we are losing currently, right? To say that this rally is just like 2017 and 2013, and that it's all good and we're just forming higher lows and we're going to go up to 100k still, is false, right? Because yes, although if you didn't draw any trend lines or if you didn't have any SMAs to look at and you just looked at the pure structure, I would agree with you, okay? We have these two distinctive bounces, right? And then, what would happen after that? Well, we can look at 2017, right? And this is what people are looking at. This is what the bulls are looking at. They're looking at two distinctive bounces, and then we went further up, right? It happened back here as well. Okay, it happens all the time in 2017. Two distinctive bounces, we went further up. It is easy for me to see why people think this is not too bad. But the fact of the matter is that we're retesting fundamental support zones and we're losing them consistently, okay? So, what I would say for Bitcoin, just to clarify my opinion on Bitcoin right now, what I would say for Bitcoin is that currently what we are seeing is a dead cat bounce. I think this is going to last at least a few weeks. I think it's going to last at least a few weeks. I can't be too certain about how long it's going to last, okay? But I think it's going to take us back above the bull market support band, which is currently at around 52.4k and 52.3k. I think there's a solid chance that it might actually take us above this uptrending level of support, okay? I think there's a solid chance of that. What I would say, and when I would say I'm happy to re-enter the market is at 61.1k, right? When we close above 61.1k, I said 61.3k in the past, somewhere in that region, right? 61.1, 61.3. If we close above there, that's when I'm going to be re-entering the market, because that's when I'm confident that we're going to be heading an upwards trend. That would flip this entire downwards trend construction, okay? But until that point, I'm going to be bearish in the market, because technically it just doesn't look good, okay? It's just objectively does not look good, in my personal opinion, from what I'm seeing on the charts. But what I will say is that this relief rally should last a little bit longer, okay? And by a little bit, I mean up to a few weeks, up to a month potentially. And, it could even just be something like this, where we just kind of, lurk a little bit and then we fail and then it just drops down, okay? It doesn't have to be a relief rally where we go all the way up here and then fail. It could be pretty anticlimactic, right? And in which, people have PTSD after a market drop. There is not much volume right now. People aren't that willing to open their wallets and buy, because the fact of the matter is this has been a brutal bull market. This bull market has been the bull market of manipulation. I've said it in previous videos, okay? This is the first bull market in cryptocurrency history where the market is controlled by institutions and exchanges rather than the retail. In previous bull markets, retail controlled everything, and so the effects of FOMO were much less unpunished, right? They didn't go punished as easily. If there was FOMO in the market could go up way more, whereas as soon as there's FOMO right now in the market, manipulators take advantage of that and the market crashes within, a matter of days. Okay, so very, very different market, much slower market, right? If you look at 2021, all we've done in this year, everyone thinks that this year's been so, hyped and it's just been an emotional roller coaster. But if you look at this as a major trend, all we've done is just range between 30k and bloody 65k, okay, or 69k. We've really done nothing. We've just gone sideways the whole year. That's all we've done. So, to say it's been a typical bull market is it's partially correct, but it's also partially incorrect because yes, the structure has been the same, right? We bottomed out in July, bottomed out in September, topped out in October, right? So some fundamental elements of the structure have been the same, but it hasn't been typical at all. And to expect, something, to say that it's going to be a typical rally like we see in December usually, doesn't really make sense to me anymore. Asked me a few weeks ago, I probably would have said it did. But as soon as we lost, and I exercised caution, as soon as we lost that 58.5k region, a matter of fact, as soon as we started topping out here at 65, 66k, I got cautious and I didn't like the look of the market. And I made that very, very clear. And I think that now my caution has paid off to a certain extent. Now, there is obviously a scenario where we bounce off of this 50-week SMA and go to new all-time highs. It's happened in the past, okay? Happened here in July and in September, right? It doesn't not happen. The point is, I don't think we're in a similar position than we are in July and September, okay? I think those were pretty clear bottoms. Those were historical bottoms, right? The only reason I bought into the market in July and in September because I knew and I predicted it well, that, hey, in July and September, this is going to happen based on the previous cycles. At those points in the market, we were following the cyclical theory perfectly, and so I was very confident in the decision. But as soon as we started seeing this false top, right, this double top here, I understood that, hey, we're not actually following the cyclical theory anymore, and hence I shouldn't be acting by it. And right now we're seeing something that isn't typical. We haven't actually seen before this late into a cycle, and we haven't seen test these support levels late into a cycle as well. So to act upon the cyclical theory anymore right now in this current bull market doesn't really make an amazing amount of sense to me. Now, another thing I can say that is bearish about Bitcoin is the fact that we had this bearish back decross on the weekly chart. Get it, do yourself a favor. Go to TradingView right now. Go to the weekly chart on Bitcoin. Go look at any time we've had a bearish MACD cross on Bitcoin and tell me what the result is. It's usually very, very, very negative. Now, obviously, there is a chance that if this candle is green enough, we can flatten this out and potentially flip it back to the upside. But the longer we wait, the less likely that's going to happen, right? That would be our last resort. I think that Bitcoin needs to have a very strong week, and don't get me wrong, I want Bitcoin to succeed. Okay, I really do want Bitcoin to succeed and go higher, right? I want it to go higher because if it goes higher, I make more money, okay? Just like you guys. But I'm just looking at it from the best, most non-biased point of view that I possibly can, and I'm telling you that the technicals just don't look good to me. This dead cat bounce, I'm going to call it a dead cat bounce. I don't think it's going to be anything of value. I could be wrong, but in order for it to have some sort of value to me, right now, this is just a whole blur. It's just nothing. Nothing's happened, okay? I don't care about 50k Bitcoin. It doesn't mean anything to me. For any kind of resemblance of something bullish to happen here for Bitcoin, Bitcoin needs to close above this uptrending level of support, right, on the daily chart, close above it, flip it for support, and then bounce off of it, and then I will consider, going back to being bullish in Bitcoin, and I'll be happy to re-enter the market again. Until that happens, this is just brainless price action. It doesn't really matter anything to me. For all I care, or for all I know, my best guess would be that this price action right here is just trying to trap people and make them sell more when it goes down inevitably, right? And trap as much money as you can. As for things like the fear and greed index, people are looking at the fear and greed index quite regularly to justify this drop, right? And obviously the fear and greed index is printing extreme fear. That doesn't really mean anything to me, right? We printed extreme fear for pretty much the entire 3-month consolidation period between May and July, right? And we didn't go up immediately. It took a long time. It took 3 months to go up. And you can bloody well bet yourself, but we printed extreme fear throughout this entire bear market region, right? This was all fear. The price was just trending downwards for a year. Of course, it was all fearful. It doesn't mean that a rally's on the way. I don't think the fear grid index is necessarily the best metric you can use. if anything, it's just supporting evidence, right? Obviously, if we have extreme greed at the very top of a bull market, or like what you think might be the very top, then yeah, obviously that's useful, right? But to a certain extent, at some point you have to realize that, hey, when bear markets trigger, it's just going to be fearful. Why do you think it goes down for so long? Because people are scared. It doesn't mean we have to flip back to being bullish. I think that's a very bull market mindset that people need to start to get rid of, because the fact of the matter is that even if we don't enter a bear market right now, it's going to be happening sooner than you think, right? I would argue that the people who believe in lengthening cycles, okay, which is me as well, I do believe in lengthening cycles, right? I think the 4-year cycle, to a certain extent, has been partially invalidated. We're going to be doing a video of that in the future, as I've said before. I think even if you're a lengthening cycles component believer, I would argue that this is still bearish, right? It doesn't matter how much you think the cycle is going to lengthen. The fact is, we've lost dynamic support zones, and we're testing dynamic support zones that typically, after tested, lead to bear markets within a matter of months. Okay, what happened in I guess you could say 2018, all right? We tested it. I guess you could say we tested it here in April, okay? We bounced up for about a month, and then we slumped back downwards, and by the end of May, start of June, we were below it again. Okay, so if that had to happen in a similar fashion, this would probably trend up for a little bit more. We bounce here, maybe a month. Okay, so let's say we reach the top of this dead cat bounce in mid-January, somewhere in that region. Okay, we form a lower high, okay, or a head and shoulders pattern of some sort, and then we drop down below it, and that takes a few more months, and we've bottomed out. We've gone below it by May, and then we slump down, and by around November or December, we've bottomed out on the 200-day SMA, and then from that point, 200-week SMA, and then from that point we can start heading upwards again, and that would be a typical bear market. That's what happens in typical bear markets. Now, I know some people would say we haven't seen a typical bull market, so why would we see a typical bear market? I do have some points for that I will make in future videos. There is just generally a lot to cover right now, and I can't get it all out in one video, nor do I want to, right? Because I don't want to overload myself as well. I want to make sure my analysis is kept clean, and I want to make sure what I'm saying I actually believe, rather than just rambling 30 minutes about random content, right? But the overall kind of overarching view that I have on this bounce is that it, from what I'm seeing right now, looks like a dead cat bounce. Obviously, that's unconfirmed. Reclaim this up-level trending level of support. I might consider something else, but as of right now, it doesn't really look too promising at all. I'm not very interested in it at all. I'm not going to be buying back too much here at all, right? I'll be looking for scalp trading opportunities as usual, as I always do. But ultimately, I'm still expecting a lower valuation on Bitcoin than what we saw, in January, February. I think this will last a little while, though, possibly until Christmas or later. So thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one.